Hi, welcome to another episode of ColdFusion. In the United States today, hedge funds are buying up entire neighborhoods, outbidding individual buyers by sometimes up to 50% above the asking price. Long story short, families in some areas are increasingly bidding up against large institutional money. Questions are being raised for some. Is it fair for Wall Street and institutional money to distort a market like this? And how did the United States get to this point in the first place? In this episode, we'll take a look.
You are watching ColdFusion TV.
Usually at a property auction, it's a single house that's up for grabs, but this is starting to change in some regions. Now, entire neighborhoods are being sold to companies. Recently, 124 homes in Texas were sold for a total of $32 million. The winning bid came from an online property investing platform, Fundrise LLC. The bid was 50% over the average asking price for such properties. This is a microcosm of what is becoming increasingly more common across the country. John Burns Real Estate Consulting states that there are over 200 investment firms getting in on housing. Some of these include major players like JP Morgan and BlackRock Incorporated. By the way, BlackRock controls $9 trillion worth of assets and has a stake in almost every company in the S&P 500, so it's not like BlackRock Incorporated is going to have a problem buying Grandma's house down the road. According to the New York Times, Wall Street has thrown roughly $60 billion to buy up hundreds of thousands of properties. There's also a trend of home builders selling their stock directly to investment firms. For example, the home builder Lennar Corp will construct $4 billion worth of houses and sell them to investment firms such as Allianz in a venture deal. In all of this, there is some concerns that this is pushing a housing price recovery without a home owner recovery. So how did America get here in the first place? After the housing crisis of 2008, hundreds of thousands of families were losing their homes. It seemed that prices would keep dropping with no end in sight. As the years passed, the US government thought that there needed to be some intervention. In their view, there would be terrible consequences for the economy as a whole if nothing was done. The government needed more buyers, but who? Since mortgages were now hard to obtain for the average Joe, and regular Americans were scared away because of the crisis, the government thought that Wall Street would be the perfect candidate for the job. In 2012, they launched a pilot program that allowed private investors to purchase the homes of residents. Essentially, they were artificially providing demand to a market that had very little. Alright, so the problem is solved, right? The prices have stopped falling, the economy was saved, and empty houses were now being lived in. Well, not so fast. As is often the case with Wall Street, things tend to end up going a little bit too far. As The Atlantic reports, between 2011 and 2017, 200,000 homes worth a combined $36 billion were bought up by some of the largest private equity groups and hedge funds. As mentioned earlier, this figure is now at $60 billion, almost doubling in 4 years. According to Dan Immergluck, a professor at the Urban Studies Institute at Georgia State University, 90% of homes in one Arizona zip code were being bought by institutional investors. Today, it's gotten to the point where institutional investors hold at least 20% of single-family rentals in some urban parts of the United States. Single-family rental homes may now be a hot new moneymaker for Wall Street, and it goes international. An investment company in Qatar and the Korea Exchange Bank are some international players that are also getting in on American housing. With global interest rates so low, investors are looking for higher yields than they can obtain in the bond market. To add to this, inflation has started to rear its head, and many investment firms see real estate as a great way to hedge against a devaluing currency. The rising cost of building materials such as steel and lumber also isn't helping. The result can end up in scenarios like the following. There are stories of first home buyers being outbid on 6 different houses, often by massive cash offers. In contrast to private mum and dad landlords, these new corporate landlords are forced to increase returns for their shareholders. this means aggressive cost cutting and creating new penalties for renters. There have been a slew of lawsuits against corporate landlords. Unsafe living conditions, mold issues, cockroach infestations, repeated flat-out refusals to fix major issues, and unlawful evictions were all part of these lawsuits. Many said that they'd received eviction notices even though they paid their rent on time. One corporate landlord, American Homes for Rent, began billing tenants for repairs after they had moved out. They increased their revenue from these actions by more than 1,000% between 2014 and 2018.
It's one of hundreds of complaints about American Homes for Rent. The company aims to please investors. What about the tenants?
Corporate office in Buckhead, where the odds of finding an unhappy tenant are good.
Are you an American Homes for Rent customer?
I am.
Connor Smith says he's been through 6 property managers
It's a lot.
and still can't get his AC repaired. He expected more from a company that's taken in millions of dollars from Wall Street investors.
As the water was coming up, I'm scooping, I'm pouring.
Nancy Moss is another American Homes for Rent horror story. When her Lithonia home backflowed with raw sewage, and when mold started growing on the walls, her landlord blamed her.
Roughly 14 months that we were in this house, we spent 2 months in a Motel 6.
Since moving into their Canton home 3 years ago, they've had a flood, they've had mold. The latest is a $1,300 landscaping bill for grass that never grew. To keep from being evicted, the Adkins paid half.
I've paid them $74,000 over the last 3 years. And this is what we have in return.
As this was going on, something even worse started to happen. The investment companies that were buying up these homes began to consolidate power. First, investment firms began to create companies to manage their homes. Blackstone Investments established Innovation Homes, who was backed by firms such as BlackRock and Morgan Stanley. Colony Capital created Colony American Homes, and then these companies started merging. In 2015 alone, Colony American Homes merged with Starwood Waypoint Residential Trust, who itself would merge with the BlackRock-backed Innovation Homes. American Homes for Rent, which is backed by investment firms such as Vanguard, acquired American Residential Properties in a $1.5 billion deal, and by 2017, 2 major players controlled nearly 60% of the market. As Wall Street and these investment companies continue to acquire more real estate, they're competing with real people. In some areas, such as suburban Georgia, renters say that it's difficult to find properties that aren't owned by big institutional investors. To some, it seems like families will be forced to stay in institutional rentals, and instead of building wealth, they'll continue to give money to corporations instead of what would have been traditionally private citizens. I have to be clear here. These institutional investor companies don't own enough real estate to drive up the price of American homes nationwide, but in certain particular areas, they are having a large impact. And currently today, investor sales are up 65% in Fort Walton, Florida from a year ago, and 54% in Flagstaff, Arizona, and 41% in Tulsa, Oklahoma. An increasing number of these sales are coming from Wall Street and institutional investors chasing profits, and the money that they can muster is limitless in comparison to individual families. A 2015 study found that institutional investments are likely to purchase homes in neighborhoods where, quote, fewer residents can qualify for a mortgage, end quote. So the big question is, if this trend keeps going, how will this affect the housing market? Will there be an imbalance? Are there any risks to the financial system here? Before 2010, institutional landlords didn't even exist, but now they're showing up in the single-family rental market in huge numbers. So what do you guys think? On the one hand, Wall Street and institutional investment provides a pricing floor for the housing market, but on the other hand, renters may get a worse deal. If this continues, there now may be a permanent class of renters living under the ownership of Wall Street. In the future, will we look back at America and ask, did the US government facilitate a transfer of wealth from would-be homeowners to private equity firms? In a sense, this is even true today, but the question is, how far will this go? So I'm curious, Do any of you know of any similar corporate property buying going on in any other countries? Or is this just an American thing? The best place to discuss this will be the ColdFusion Discord. There'll be a new channel made just for this video. I'll leave a link below. Anyway, if you want to see anything on business, science, technology or history, be sure to subscribe to ColdFusion. My name is Dagogo, and you've been watching ColdFusion, and I'll catch you again soon for the next episode. Cheers guys, have a good one.
Cold Fusion. It's new thinking.
Here's the truth.